focusing on the demand for money. So this is in reference to your learning guide, uh, 1 2.1, the demand for money. And then I added some topics lang na wala sa learning guide. Now, at the end of this session, you guys will be able to discuss the demand for money, explain why people hold money, and also learn the different factors that can affect the demand for money in our economy. Now, the first question is, what is the demand for money? So, when we speak of the demand for money, we are not actually asking this kind of question, like how much money would you like to have, or maybe how much income would you like to earn, or how much wealth would you like. Because if we ask those type of questions, most probably your answer would be as much money as possible. So that is not the demand for money. Instead, when we say the demand for money, we are more concerned of how much of your financial asset you want to hold in the form of money. So that is in the form of currency or in a bank deposit. Now, in deciding how much money to hold, people make a choice about how to hold their wealth. Now, let's say for a given amount of wealth, the answer to this question, what is the demand for money, will depend on the cost and benefit of holding money, like money you have on hand, versus your other assets. Assets sa din ng physical asset, like yung mga eyes, mga sparkling eyes, mga kissable lips diha, mga chubby cheeks. It's different assets like real estates, deposits, kanyang mga jewelries, mga possessions ninyo, mga inheritance. So the demand for money represents the desire of household and businesses to hold assets in a form that can be easily exchanged for goods and services. So the demand for money is also called the demand for liquidity. So when we say liquidity, it's how you can easily spend your money, or how fluid or how your money flows. Okay, so there are several reasons why people hold their asset as money, so that they can purchase goods and services. So the money, let's say you have on hand to purchase goods and services, we use it for everyday transactions like buying groceries, for transportation like bayad sa taxi, for jeepney, or maybe paying for a rent. Sometimes we hold money for emergency purposes or contingency purposes, like for health, or maybe for a trip after sa COVID. So maybe you guys nag-start na mag-save now para kung mawala na yung COVID. I'm pretty sure daghan kayo mga sale sa mga airplanes, mga ticket, right? Kaya para mabalik na ang tourism. So there are different motives or demand for holding money. Right now I'll be discussing three: the transaction motive, the precautionary motive, and the speculative or the asset motive. So the main reason for holding money, instead of putting your money in an interest bearing assets like bonds or time deposit, is that we use money for buying useful things. So we call this the transaction motive. Now the transaction motive for holding money, it arises from the fact that most transactions involve in the exchange of money, again like buying grocery, so transportation, because it is necessary to have money available always for transaction. So these are the money you have on your purse, on your wallet, nasa inyong libro, nasa inyong cabinet. Okay, so we need or we hold this type of money for transaction demand. So that's the transaction motive. And also, many people hold money for contingency purposes, and we call that the precautionary motive. So people often hold money as a precaution against uncertain future, like unexpected expenses for medical health, for maybe kaning mga repairs sa inyong balay, tay mo bagyo lag kalit, yung ana, or na mo emergency use, siguro sa car repair. So these types of motive is required especially for immediate payment that is unexpected. So that's precautionary motive of holding money. And then people also hold money for speculative purposes. So if you remember, money is also an asset. So it's a special kind of asset since it stores value. Now the demand for an asset depends on either the rate of return or the interest rate and its opportunity cost. So typically, if you just hold your money, it doesn't give you any interest or rate of return. And most often, the money that you're holding right now will depreciate over time. That is because of inflation. So let's say if you have 1 million peso right now on hand, gitagan mo sa inyong mama o 1 million because nagbinutan mo or flat 1 mo sa Soksay 5. So imong 1 million, if you decide to keep it or just hold it, put it in your cabinet or sa ilalom pa sa inyong unlan, well, over time, maybe after 1 year, that 1 million will not bear you any interest. So your 1 million will still be 1 million, and mahitabo pa na after 1 year, the value of your 1 million will depreciate if in case magka-inflation. So that's why most of the financial experts would say that if you have a large amount of money, it would be better if you put it somewhere where you can earn a higher interest rate. So either put it on a bank na naitaas na interest or put it as an investment. Maybe pwede government bonds, mga corporate bonds, securities, or signa mo'y business, or maybe if you have a friend now planning to do a business, pwede nyo i-invest in yung kwarta dito, which can give you an interest or rate of return in the future. So the opportunity cost in holding money is the interest rate that can be earned either again by investing your money, or maybe pwede mo maghimo og kanang lending company. So if you have a large amount of money, you can have it lent to someone who needs money, and then patungon na ninyo interest. So in return, maybe in the future after 6 months na mo'y makuha nga interest rate. Okay, so that's the motives for holding money. That's transaction motive, precautionary motive, and speculative motive. Now, what is the relationship between interest rate and money demand? Now, we distinguish the different motives so we can understand better how the quantity of money demand will be affected by this interest rate. So when we say interest rate, it is the rate at which interest is paid by a borrower for the use of money that they borrow from a lender. So in other words, when we say interest rate, it is the price or the cost of borrowing money. Now the relationship between interest rate and money demand is inversely related. So meaning if the interest rate rises relative to the rates that can you earn on money deposit, then you guys or people will tend to hold less money. So pagtaas daw ang interest rate, people will hold less money because people will tend to invest their money to those type of investment that can give them higher interest. But when the interest rate fall, then it would be best to hold your money on hand. Now, it's normal to borrow money for interest since our government and other firms also borrow money to finance their operation. So for government, they usually issue government bonds to the lender and then just put in or pay interest to those type of bonds. Also, household normally borrows money. Kinsa man siguro walay utang karon, no? So household normally borrows money directly from the bank. So there are a lot of types of borrowing, like salary loan, housing loan, car loan, computer loan. Pwede po sa 5-6 kaning sa mga Turko or mga Indian. So that's another form of borrowing. But then again, if you borrow money, you have to pay the interest rate, and that is the price of the cost of borrowing money. Now, the relationship between the interest rate and the demand for money can be shown in the money demand curve. So this is like your regular demand curve. It's downward sloping, showing the inverse relationship between the interest rate and the quantity of money. Okay, so the demand curve shows the quantity of money demanded at each interest rate level, ceteris paribus, or all other things held constant. So let's say the current interest rate is at 10%. So if the interest rate is 10%, then at this level here, let's say 1. So that's the quantity of money that is in demand. So when we say a decrease in the interest rate from 10 to 7, so if the interest rate is low, then more people will demand more money. So let's say this is 2. And if in any case that the interest rate will rise or increase from 10 to 13, let's say here, let's say mingon ang bank that if you save your money to our bank, you will earn 5% deposit compared to 1% deposit. No, 5% interest rate. So if that happens, then kung na kay 1 million peso, it would be best to put your money on the bank, since putting your money there will gain you 5% of the amount. But if gamay kayong interest rate, then it would be best just to keep your money on hand, or to keep your money somewhere where you can earn a higher interest rate. So that is the money demand curve, or the relationship between interest rate and the quantity of money. So there are several factors that can affect our demand for money, that can shift our money demand curve either to the left or to the right. And these are the price level, the real GDP, composed of consumption, investment, government spending, and the net exports. And you also have the transaction cost. So any changes on any of these determinants can again affect our money demand curve. So let's say for the price level, so when we say price level, so that's inflation. So a higher price level or an increase in the inflation rate, it makes the goods and services more expensive, meaning mas mahal ang mga palitonon. So if the goods and services are more expensive, then it requires more money to buy those goods and services. So an increase in the price level, or if we experience inflation, our money demand curve will shift to the right or shift outward. But if our economy will experience deflation, so deflation will make our goods and services less expensive, so it requires lesser amount of money to buy our goods and services. So that will make our demand curve shift to the left. So a decrease in price level will shift our money demand curve to the left. Now let's say for real GDP. Okay, now an increase or a changes in the real GDP can affect the overall income throughout our economy. So let's say our GDP or real GDP will increase, so the income level will also increase as more workers can find employment. So let's say our economy is expanding, So more people have jobs. So more jobs meaning more income. More income, more money to spend for goods and services. So that requires a greater quantity of money. So an increase in real GDP will shift our money demand curve to the right. However, if our economy will experience contraction or recession, so meaning GDP is decreasing, so it follows that unemployment rate will also increase, meaning more workers will have no jobs. So no jobs, no income. No income, no purchasing power. So they cannot spend to buy goods and services. So our economy will need less quantity of money. And that will shift our money demand curve to the left. So a decrease in real GDP will shift our money demand curve to the left. Okay, how about transaction cost? So when we say transaction cost, so those are the additional cost that is added to the price of the product that must be paid to complete a transaction. So example of a transaction cost is taxes like a sales tax or ATM fees. Diba right now, most of the banks, they increase their ATM fees, especially katong mga transactions with other banks. Pero kung bank to bank lang, it's still the regular amount like 5 peso per balance inquiry or per withdrawal. So that is an example of transaction cost. So transaction costs will act as the same as the price level. So if the transaction cost will increase, so that makes the goods and services more expensive. So more expensive meaning it requires more money. So that will shift our money demand curve to the right. And then if the transaction cost will decrease, so it will make our goods and services less expensive. So our money demand curve, if the transaction cost will decrease, will shift our money demand curve to the left. So this is how these factors can affect our money demand curve. Again, that's price level, inflation or deflation, our real GDP or our real national output, and then transaction costs. Now the demand for money again determine how a person's wealth should be held. So when the demand curve shifts to the right and increases, it means that individuals are more likely to hold money. So if more people will hold on to money, meaning that there's a liquidity advantage in holding your money on hand, meaning mas dali siya spend. But when the demand curve shifts to the left, so it's either shows a decrease in the demand for money. So meaning it's better that you put your money to some to something that is interest advantage other than holding it. Okay.